Hi, this is Acme with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 16th of February. Starting off with a stock which I'm kicking myself at not covering yesterday. I thought I'd just see how it went. But with Braveheart, we've got this bullish divergence line, which was the reason for potentially putting it in yesterday. Broke a line of resistance there from the, end of last year. And view now is that while we're above the broken resistance line around 17 pence, and especially while we're above the initial February resistance at 21 pence, we're looking for the 50-day line around 26 pence over the next week or so, and then maybe over the next month up to the 200-day moving average, and the top of that January broadening triangle as high as 34 pence. So basically, Braveheart bouncing off the sort of 2021, 2022 support just under 20p, and hopefully then going towards the 40p range top. Onto a stock which hasn't been around on the Bulletin Board Heroes for quite a while. We got Bluebird Merchant Ventures. Here you can see that there's some signs of recovery here, a bullish divergence line bouncing off the floor of that falling trend channel from this time last year, around 1.5 pence. And if we can get a decent close above the 50-day moving average at 2.15, which it looks as though we'll get, the target here is the top of the channel and the 200-day moving average at 3 pence. So a bit of recovery there. Recovery also in the air for Keris. Here you can see that we actually broke that falling wedge from June back at the early part of last month, around 14 pence, then tested that as support again, which was not very nice. But the current situation is we've got rising 50-day line and a consolidation above that, which is normally a good starting point for a move higher, and above the 50-day line at 14 3/4, looking for as high as 25 pence by the end of next month, supported by that bullish divergence line in place since December in the RSI window. On to a stock which is has done rather well of late, Cloudbreak Discovery, which hopefully I'll get the right stock here, the right market here. Here you can see that the shares actually hit the line of resistance that we were looking for, just above 5 pence, hit it and then came back. The view now is that at least while we're above resistance on the way up, around 3.25 pence, we could retest the 5 pence area. Big picture target here over the next month or two, perhaps as high as 8 or 9 pence at that June resistance line from last year. So looking quite well set for Cloudbreak at the moment after a long period in the shade. Requested stock coming up next, which is probably not for widows and orphans, but here we go. Evraz, the floor of the gap there was at £3.22, I believe, just a couple of days ago. And while we're above that on an end-of-day close basis, looking for the chance of fully filling that gap up to around the 410 area, or at least partially filling it, so maybe 380, 370, something like that. But you have the stop loss there as an end-of-day close back below 322, which I think is a reasonable risk-reward there on that. Chance of the shares having bounced off that falling RSI support line, but that is a little bit of a falling knife situation, so that stop loss at the bottom of the gap, I think, probably has to be enforced quite vigorously. On to Itaconix, and here you can see that shares just breaking that line of resistance from June there around current level, so call that 6 pence, above 6 pence, looking for the 200-day moving average, and the top of that broadening November triangle there as high as 8.5 pence by the end of this month, hopefully. On to Jangada, which has been is a favourite of some. I've seen on Twitter, and sort of hoping that its day will come. Looks as though its day could come now. We've got a brought uptrend line there in the RSI window, so bullish divergence line there. Probably want to see the shares through 7 pence. If we can break 7 pence, then it's the top of the rising trend channel from August, as high as 9.5 pence by the end of next month. The plus points here are the way that we've got a rising 50-day line, and that should start dragging the share price through resistance and through the 200-day moving average just around the 7 pence level. Stock which has delivered RNSs in 2 consecutive days, so clarification coming this morning. Here we've got a rising trend channel for Kistos. The old low there back in November around 335, so really want to have an end-of-day close above that. If we can get that, then it's hopefully back up to the initial February resistance around 394, perhaps by the end of next month. But the point here, I think, really is the overall rising trend channel. We can remain within those parameters, the floor there around 327, intraday at least, as in terms of support. Then the rise that we've seen in Kistos, meteoric rise rather, over the last year or so should be sustained and eventually give us a £5 target maybe by the summer, something like that. What we don't want to see, I think, is probably any lasting price action back below the 200-day moving average. That's currently at 297, but ideally we stay above 335 in the near term. Moving along to a stock which looks like it's rehabilitating itself as well after quite a torrid time. Kibo, broken that resistance line there from April, broken the 50-day moving average at 0.17, and also broken the 200-day moving average. That does suggest there's enough gas in the tank for the stock to head back up towards post-June resistance at 0.3 pence over the next 4 to 6 weeks. The ideal scenario is that there's no lasting price action below the 50-day line ahead of any move towards the 0.3s and beyond. On to stock which was requested in quite a timely fashion, I think a week or two ago, by a Twitter follower, and I hope he's enjoying the ride. We broke the neckline resistance there at 4, broke the 200-day moving average at 4.15, and now we're holding above the post-September resistance at 4.8 pence, let's call it. While we're above that, looking for as high as 7 pence by the end of this month, which is the top of a broadening August trend channel. We've got the bullish divergence line there, and looking quite good there in terms of recovery at live. Okio been quiet market until this week, where there's been good news on the different phases that it's been going through in terms of developing dry eye disease treatment. The nice thing yesterday was the close, basically closing that gap close buy signal, which is the shares are built on today, and looking for at least a retest of December resistance at 8.5 pence, and the bigger picture perhaps a bit better than that even. So looking for, after that, if we can get through that 8.5 pence area, then up to as high as 11 or 12 pence, which is the top of a rising trend channel that I'm currently drawing from back in August. So that looks healthy, if only because of the gap close, and in fact the gap higher off support. So it's a double or triple buy signal for the shares in the near term. On to Premier African, which has been one of the best stocks of the recent past. Bit of jiggery-pokery with the shares breaking through 0.5 and then coming back to clean out weak hands down to 0.32. I was hoping for 0.33 to be the low there, so hopefully some people had a bit of wiggle room on that 0.33, the resistance on the way up. Current situation, I think that having shaken people out, the tree shake, we should now finally head up towards the 0.6 pence previously anointed target, and that could be as soon as the end of this month or maybe the first half of March. Moving on to a stock which is on the Aquis market, and somebody's got to give these things a bit of oxygen, I suppose. Here we've got a break of the December resistance line there for Quetzal, rising 50-day line, which is always a plus point, and the bullish divergence line there in the RSI window. Key here is probably breaking 5.5 pence, the last January resistance. Bigger picture target here, up to as high as 11 or 12 pence at the top of a rising trend channel from back in March last year. So let's see if Quetzal can do that by the end of this March in the wake of its tap maneuvers. Just 3 stocks to go now in this rather bumper session that we've got, rather more bumper than I was thinking that I would do, but it's difficult to resist skin biotherapeutics rather at the moment. We've got a break of that resistance line there from the end of November at 41 pence. Above that, looking for resistance on the way down at 63 pence, perhaps by the end of this month. But good bullish divergence there with the bullish divergence line there from last month. And that's basically powered the shares on their current move. Those sorts of lines do give plenty of fuel to recoveries when you see them. On to technology minerals, which I know a lot of people are willing higher. Here we've got a rising trend channel. I've updated the chart. Rising trend channel, which is in place since November. We've just broken the February resistance line and the 50-day moving average at 3.8 pence, and above that, looking for the top of the channel as high as 5.8 pence as soon as the next 2 to 4 weeks. The plus point here, certainly the way that we've got a nice rising 50-day moving average. I suppose even the 200-day moving average is rising there, so that is a positive in the sense that when they cross, the next time they cross, it'll be a golden cross. Finishing off with a stock where I'm making a punchy technical call, just saying that with Westminster Group, although I think shareholders have not exactly had a party over the recent past. It looks as though this situation is finally bottoming out. We've got this bullish divergence line which has been multi-tested, and we're just breaking through the 50-day moving average at 3.14. The more price action we can get above the 50-day line over the next few days, the greater the chance of the